Hello, this is Dave, and welcome to Equities Story. I'm with Wolf, and this is just a general share advice, not personal advice. And as expected, lots more news coming out now. Wolf, let's start with the big fish.
Yes.
CSL.
Yep.
Okay.
Can you bring out the result? We'll just go through it for everyone.
Yeah.
And we can go. I can tell you one thing: it is still expensive at 40 times. And I can tell you that the dividend is not attractive. So straight away, they need to deliver something really exceptional for me to get in, which they didn't. It was a good result, but nothing outstanding. The outlook was growth in the single digits, right? Upper single digits, but single digits. So at 40 times, would you get excited about that? No. However, the only hope you've got in here, like if you're holding, is they usually under promise over deliver. So you're hoping maybe they're going to come up with a 10% plus in 2023. But for the moment, I think I wouldn't be chasing this.
So tell me, why has this performed so poorly? Because the whole story is that everything's back to normal. CSL.
Yeah, absolutely. Look, you're right on the money there. The only problem is that this looks obviously 12 months back, right? And the last 12 months, they still had the issue with collecting blood plasma, which is the key driver to the earnings. So, the backward looking.
But have they given any guidance, Wolf, that that's back?
Yeah, they have. They're talking about that this is actually really cranking up now. So, that's why they're expecting a much better result into 2023.
Okay, so it's the fact that maybe you look at this and people don't like it an opportunity long term?
Yes and no. I mean, I'd rather pay it much lower price, right? The problem with it for me is the PE ratio, or the valuation of this doesn't justify the growth of it, right? So it's just expensive on that side. If we're looking for value stories right now, or we're looking for strong growth stories, this doesn't give you any of that. It's too expensive and not enough growth.
So what you're saying, Wolf, this potentially, and you look at a chart, it's had this sort of sideways movement in a range. It could just continue in that range.
I think for another 12 months, yes.
So, okay.
Unless something extraordinary happens, like I said, unless something, really left field, I know that they've come up with a big acquisition recently, right? So unless they come up with some really extraordinary results or something on those lines, crank up in plasma collection and so on, then maybe we can see a better share price. But I think, logically thinking about this, it's probably going to go sideways.
All right, thank you very much for that, Wolf. And so maybe people who are in this for a more medium to longer term might just look elsewhere. Dow.
Yes.
Struggling to get over trend. Bit of a red candle. Looks like it's pivoting back sideways, Wolf. I'll bring the report across if I can work out how to do it. There you go. Yeah. There we go. Right. So obviously revenue down, earnings before interest down.
It's just disappointing. Next.
Profit down.
I think it's untouchable. This, Dyna's a good company, except right now it's just not going quite well.
So again, chart looks good. So
the results would not get me into this story at all.
All right, let's have a look at Santos. So, it's just going sideways at the moment, Wolf. The announcement, the headline numbers were certainly pretty good, weren't they? Let me bring the half-year report across so we can all have a look at it. And so revenue up 85%. Looks
as
good.
Expected. They had a really strong oil price, so you'd expect pretty good results, and they did deliver ridiculously improved results.
You know what, Wolf? This story is all about where you believe the oil price is going.
Correct. Yeah. Correct. This is very leveraged to the oil prices, right? So the good thing is they had a really good period. The bad news is that those oil prices are not longer there right now, right? So like you said, where do you think the oil prices will be in, say, 12 months' time? That's how you approach Santos with. They're going to deliver some buybacks as well. So that's a positive for the shareholders in there. So yeah, I mean, okay, where do I stand with it? I think I need to be believer in oil prices, which right now I think.
Wolf, it's a charting story, right?
Yeah, look, while I don't know, I don't think so. If I think at the bigger picture, I just don't see prices at $150 for oil prices. So pass for me.
All right, we differ there. That's interesting. It's always good to have a little bit different. And I think I'm going to write this video down in our diary so I can bring it up to you next year. So where do you think oil prices are going to go, Wolf?
No way. It's probably going to go stay roughly the same, or about $100.
Okay, that's very high though.
Yeah, but it wasn't that, 120, $130 that was long.
You don't think it's going back down to 40?
No, I don't think so. I think it's still going to be, as long as this war keeps going, it's going to be elevated, right? So it probably a big factor is the war.
Okay, all right. Yeah, I'm of the opinion it is going to go a lot higher, but okay, I would rather you be right than me. That's for sure. Wolf,
yep.
Corporate travel.
Mm-hmm.
Again, not trending. Can't get back over trend.
Mm-hmm.
Looks pretty miserable. Certainly not technically looking very, very good at all.
Yeah.
What about the announcement? Is travel? Is it back on?
Yes and no. I think what we're seeing from the travel companies is the same old story, right? So pent up demand, yep. Improvement, yep. Lack of staff, down. So there's trouble all around the airports, baggage handlers. So there's a lot of chaos. Delays with flights, cancellation. There's problems in this industry at the moment. So I think that sort of reflects of industry-wide reporting that's been happening here at the moment. So look, it's an interesting, isn't it? Because you probably want to buy it when there's problems like this, because it's temporary. It will sort itself out eventually, right? So do I like corporate travel? Probably not my favorite type of story. I think I still prefer the sideminders of the world, the SDRs and the Sercos, right? But there are problems in there. So is it the time to buy now? Probably not, unless you've got the really long-term view where you're probably trying to find the best story and buy it at the right time. So pass.
So again, just really a trending stock.
Yeah. Right now. Not there.
So now SUL,
yes,
it's sort of, I'm indifferent to this because we've got some good price action. Maybe a little bit like this. Maybe it's going to go sideways for a while. I don't think it's really a buy now in this environment. It'll be a buy, if it can go sideways and then have make maybe a little breakout. But not bad, Wolf. It's up 7%. Is this a case of not as bad as it could have been? Everyone's relieved.
I think this is the case of way oversold, first of all, right? So doom and gloom by their market, thinking that they're going to have zero sales in 2023, and they deliver okay, right? I know it's been pretty flat to down, but it wasn't as bad as the market expected. The market's probably expecting the complete collapse, retail collapse, but it wasn't to be. They're still paying a pretty good dividends of about what I think we worked at about 6.5%. So at the end of the day, not bad, but I still prefer JB Hi-Fi in this space.
Yeah, but Wolf, they've got good stores, haven't they? They've got good shops.
Yeah, they look decent, but in a market like this. So if you look at, say, the slowdown where it's artificially brought up by the high interest rates, this is discretionary stuff, right? For me, would you be interested in that sort of stuff right now? Maybe not. So yeah, the stores are good, Dave, but when things are going well, this is the story you buy. When maybe the chips are down, you're probably thinking, okay, I'm going to go to the blue chip of this space, JB Hi-Fi.
Yeah, well, I couldn't agree more. It's the number one in this space, isn't it?
Yeah. But look at that. Look at the FY trading update. I mean, that's decent. Like for like sales growth, FY23 versus FY22. So that's why it's up to date. I'd say on that, not on the actual result.
Sorry, obviously I know the other. What's Backpack?
I think it's a travel adventure type store.
Oh, that's interesting. Up 42%.
Everyone's traveling and adventuring out there. Like me.
Wolf, RDY, where put it on Einstein's. I love the little breakout, good story, and it's really went on for it, and it's actually retested just under that 350.
Yeah.
I thought this was of all the announcements we saw today, maybe one of the strongest.
Yeah, look, the thing going for it, it was pretty good results, right, on paper. And the thing that's going for it, it is actually a profitable company. One of the very few tech stocks, and there's actually only a very few, you can probably count on one hand in Australia, tech stocks that are actually profitable. So revenue up 56%. Remember, this is also, of course, on acquisitions, right? So it's a story that's, it's got pluses and minuses. It's not the best in class. So it's a trading stock more than anything else, but it does have that profitability attached to it, which is very attractive from an investor point of view. So, you can definitely trade this, no problems. And there is definitely that safety net of being a profitable company. And look at the positive outlook as well, and increasing its FY26 organic revenue target. So that's also positive there. So overall, Dave, you've got a story that's probably might have a little bit more room to move.
Thank you for that, Wolf. BXB Brambles, which I think was a really nice surprise. We would buy this one. We did have a look at Wolf with his old charting expertise. He's getting quite good, the old Wolf, actually, is in his old age. We're just looking at, every this time of year, it's had that nice move up. This last year,
for me.
Yeah, it just started selling. It really is a range trading story. When it has a bit of a move, I don't think the market sort of really, it doesn't trend that well, or has it in the past. So I don't think I'd be buying it. But again, Wolf, up 4%. I mean, in a difficult climate.
Yeah, I think, look, there was a very interesting article today in AFR about Brambles, and the title was "Brambles shows how to conquer inflation." Right, so pretty much because Brambles is a giant in this space, really, it's one of the leaders. It's pretty much passed on all their cost increases to customers. So this is basically how they've done it, how they've navigating through this by having big markets position and be able to pass on a lot of these costs back to customers, which is, this is exactly what you're looking for those companies. If you're investing, you're looking for those companies that can do that. However, is this the company that, I'm really excited about? No, because traditionally, if you look at the actual growth, it's in a probably single digits. So for me, not the best company for me. I prefer something a bit stronger growth. So pass for me, ready. But give it credit that management were good enough to navigate it through it. And if you look at the numbers here, Dave, just move it slightly down. A lot of them, constant FX currency thing, double digits plus. So well done. But
unfortunately, Wolf, it's not. It's we're in the business of making money, so it doesn't click in as a dividend stock because it's a poor yield, and it's reasonably expensive, and the way it trades, it's unlikely to go higher. So unfortunately, it's not a buy, but congratulations, you did really well, Brambles.
Yes, yeah, and look, if things change, if the market decides to, okay, it's time for it to get out of this range trading of between say $13 and $10, then maybe we'll look at it as a trade. But I think right now let's give it some room to breathe, settle down, and we'll see where it is by the end of the week and next week.
Wolf, let's look at Bapcor. Because again, this is a company that hasn't traded very well. It's sort of, again, I'm looking at it, it's still struggling really to do anything. And certainly in the last announcements, they didn't let us down. What about today's announcement? Have they still delivered?
NPAT was up, I think, 5.9%. So single digit type stuff. But you know what? Not bad. Revenue growth of 4.6 year on year. I think probably FY23 is the key now, right, for a lot of these retailers to see where they put on. So
I like the way they put in last year over a 2-year period. So
I know. Just to make it sound a little bit better, Dave. I mean, it's just all marketing. You got to love them. But like SUL.
But I don't blame them doing that because people have such short memories on the market.
Correct.
We're talking about short-termism. There's an argument that maybe some of these reports should have the last 4 or 5 years in, so people can.
And Dave, we also had the pandemic highs and lows, right? So it would have been fluctuating like a yo-yo. So understandably, they are trying to maybe project a much longer picture to see exactly what the truthful growth is, maybe. But anyway, I think
it's a strong, it's a strong little business, though, isn't it?
It's a decent business, but I think the early days of strong growth is gone for Bapcor, right? It's more probably now single digits to low teens type growth business where, is it for me? No. I think there's better stuff out there to play with.
And again, the dividend at 3% isn't neither here or there.
That's right. And it's it's very similar to the Bramble type stuff. It's a little bit expensive, not enough div. It's just sort of in the no man's land right now.
Right. We've looked at a lot of stocks today, and they're actually all gone in the bin so far, Wolf.
Yes, I know, but don't worry, we're going to come up with one or two.
All right, SDF. Again, this is a take profits technically. Can't get through that 550. It's in a trading halt at the moment, so it'd be interesting to see what it does.
Big amount of money. I think 330 million odd. So, I think maybe that also is going to weigh on that chart of yours, Dave. So,
what are they raising at? $5?
I don't know. I haven't seen the actual details of it, but I just saw the headline numbers. They're raising $300-something million.
DHG.
Yep.
Again, Wolf, it's had a good reversal, back to trend, but you wouldn't be buying this on the charts. It just needs to do a lot more.
Yeah, and I think it's obviously a poor cousin to realestate.com.au, right? If you're going to be buying in this space, you'll probably be looking at REA. However, it's profitable. It is still growing. So I think, and this is my prediction here, private equity probably will have a look at this for sure. Looking at the number 2 position player, maybe even a overseas player that's looking for a market entry to Australia, take on REA, could be very interested in this.
Because it's got
it's just too expensive, right? What it is. So again, according to no man's land here for me, it's too expensive. A decent story, number 2 player.
All right.
Not much else you can say. Not for me at the moment.
So let's have a look at Whisper, Wolf.
Yes.
It's still obviously negative. It's down below the trend line. We don't like this. It has had recently a little bit of a jump up, maybe on the daily. I think now the way that stock is forming, you'd want to see it do a little bit more. You want to see a few good decent green candles before you bought it.
Yeah.
But let me bring the
I'm putting my nut list on the line, Dave. Here, I'm saying this is the one. That could
right. So let's go through it and tell us why you think it's the one.
All right. So you've got the revenue up 48%. That's very, very good. So strong 3-year growth, right? Of I think 31.4% with ARR of 27. So they're reducing the operating expenses is exactly what we've asked of all these tech stocks. You've got to reduce it. You've got to become positive cash flow. So they are. Have got the target by the FY23 to become cash flow positive. EBITDA loss better than expectations. That's a positive. Strong balance sheet, so they've got plenty of cash. So profitably expected FY23. So this is the key here, Dave. So if you've got that 12-month view with Whisper, and it is cheap, 140 million market cap, 70 million revenues, that puts it on 2 times revenues, Dave. This is the one that I think maybe has got the best scope of getting back to that $2.
Love it, Wolf.
Okay.
And some good highlights, some decent wins there.
So if you can, stomach that risk of still unprofitable, loss making, could be rewarding.
I love these 8-year contracts. How good's that?
I know, it's great, isn't it? I mean, usually with the governments, you usually get a nice big long contract, but that's brilliant, isn't it? It's a nice little story.
Very, very strong. You have to love it. Okay. Wolf, I get it. You like the story. We just got to see some better price action. It's still.
I'll leave the entry price to you. Fundamentally, I'm very happy with what they come up with today for the next 12 months.
Well, just wait. I mean, I think everyone needs to look at Whisper, mark it down. If you see it on Einstein's, that's when you really buy it.
Okay.
The thing is, Wolf.
Yes.
We know we're going to be in for a torrid September, right? Or we think we are.
Yeah.
Right.
Yep. So maybe just be patient, baby, right? Unless you see that sort of, starting to go up plus 130, 140, maybe that's when you sort of get in.
Yeah, I mean, if it has a little bit bounce up, it doesn't look too bad. It might run up, but really, again, you just want to see it over the blue line and trending. This is all hard money. You want to take the money from 150 to
as a trading, absolutely, Dave. As a fundamental buy, you've got to take a risk somewhere where you think there's lots of value here, even though it's below.
Oh yeah, no, I accept that.
Right. So the long-term brain of mine saying great opportunity. And I have to obviously, because you've retrained my brain to look at the charts, it's very hard for me to make that really strong case for the buyout now. But my overriding thing is there's an opportunity here for this.
All right.
What are long-termers?
On the watch list, long-termers. LIC. Wolf, the price action actually has been pretty good. It's got over trend. It's held up. I think, I can see it's down at the moment. I've liked it to go on with it and done a little bit more. So most probably it's maybe looking like a bit of profit taking time.
And I know I probably agree with that. Actually, price movements, I think there's, the result was okay. Profit went down, revenues are up. That's the type of business it is. It will have, depending, of course, the houses they sell, the projects they can't get on board, and so on. So it fluctuates from year to year. Great company. I really love what they've done, and I've been a big fan of it for a long time. We've looked at it since about $5 for a long time. So it's done a fantastic job. At the moment, real estate a little bit weak. So for me, I think probably just leave it for the moment.
SLX. Wolf, it's had a tremendous run. Certainly a lot of resistance at 350. Definitely profit taking time from a technical point of view.
Yes.
This looks sideways at the moment. Down today 8%. It's not good on the announcement. So yeah, definitely time to take a profit if you're in it.
Yeah, look, the announcement was pretty interesting. Maybe that's what the run-up was, right? Because of this announcement. And it was US government approved 700 million package for some of these technology in uranium space. The problem was, when I read through it, it was a pretty wishy-washy. I mean, what does it actually mean for Silex and its partner? How much are they, how much funding can they get out of this 700 million package? God knows. I didn't, there was just nothing on there to give you any clue. They might get a little splice of it. I mean, God knows, maybe nothing. So definitely profit taking, and maybe that's the end of the run for the moment.
Wolf, going to some different stories. TMS. So it's had a tremendous jump today. It's up 20%. I think earlier it was up about 30 or 35%. Starting to come down.
Yep.
I'll try and start telling us about TMS and why I bring the announcement over.
Yeah, so this is a copper player in I think Northern Territory, Tennant Creek area. The result today was really why it's shot up. 63 meters at 2.1 copper and 4.6 gold. I mean, that's very, 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 very good, right? And we've seen some previous good results out of it. So when you see stuff like this, you get excited. The market sort of pushed it up, but I think they need to come up with more than just the one hole, of course. So let's wait to see what else they've got. They've already got, I think these results, just the next line says, these results highlight Bluebird's potential to rival other high-grade copper and gold deposits, which, are around. So let's have a look. It's looking very promising. We need to see more. Definitely one to watch list. Definitely maybe one to trade if we see a bit more stability in the share price, because at the moment, such a gap, you just don't know where it's going next.
Well, there's also a few things that it's really not that deep, which you've got to like. Right. Big tick.
Yep.
You're getting decent meters, 40, 63. I suppose the other thing that you've been teaching me, Wolf, to look at is the width of these. Right. So I suppose when you look at that, it does look maybe a little bit narrow so far, doesn't it?
Yeah, it does, because when you actually look at it, right, from that point of view, it's actually going almost straight down the guts, which is a little bit misleading. If they went from side to side, probably the true width of this is probably half that. If 63 is probably about 30 meters, I'd say, proper width. So you've got to take that into account, of course. But 2.1 copper and 4.6 gold, that is good still results. Don't get that wrong. So we just need to see more.
But sort of to get to that material, you've got a lot of dirt to take.
Yeah, you've got 150 meters of digging of probably much rubbish, I'd say.
Yeah, which
it's cost. It's pretty much costs. I mean, you just never know. They could have some low grade stuff on top, where they can maybe make some money out of it later, or blend it with some other stuff down below. But it's the high grade stuff we're interested in, and maybe there's something there, but it just needs more drilling.
All right, and interesting though, Wolf. But
you like the blobs, don't you? You love the blobs when they show the pictures like that.
Well,
gets you excited.
Well, you want to see a blob, but you want to see it sort of a bit of width as well, right?
Yes, you want a blob that's got the arrow saying can go side, side, and down.
Down, right? You just don't want to see one which is just down. I mean, one, it's just more expensive, isn't it, to obviously get out of the ground.
All right. The deeper you go, the more expensive it gets.
Wolf, Magellan, you know what? It's had a bit of a run up with the Nasdaq, the tech stocks. I did say the other day, come on, they can't get through 15, get out of it. On live, if people are in it, it's still, look, it's breaking trend on the daily. It's starting to look like definitely a sell. If anyone's in it, just get out of it. Again, losing a lot of customers, aren't they? Yeah,
look, Dave, the outflows are the key to their performance, really, because that's how they're going to gather all these fees under funds under management. So the fund under management is flowing out, less revenues. It is in the lap of the Nasdaq gods, right? Nasdaq goes up, it's probably going to recover. Nasdaq doesn't do much, it's probably going to go down, I'd say. So right now, Nasdaq having a bit of a breather, it's looking down. The result today wasn't fantastic, so it exacerbates the problem. For the moment, profit taking is happening right now. No, there's just definitely you'd probably be taking a profit if you haven't done already, and wait for another move up. And the only way it's probably going to go back up again if the Nasdaq starts trending again.
Right. Anyway, it's looking ugly. It's always looked ugly. Stay away. Right. Just going to end. 4 stories, Wolf. The brokers have come out. They've given some sort of price targets on these.
Let's look at that.
These are not our price targets. So, for us, we want to see this candle look similar to this by the end of the week to like it. But who likes it and who doesn't? 360, Wolf.
All right. So we've got one, Morgan Stanley, with a 680 price target on there. And they've got an overweight. So they're okay with it. They're satisfied, but saying that, they are just not that bullish. I mean, 680 is not that far away.
Right. Okay. So it's not, if you're going to buy this, you've obviously got to have a tight stop on it, especially September, October coming up. Goodman Group, technically, it's not a buy now. Fundamentally, it is a buy for you. And it's a buy for a number of brokers too, right?
Yes. So definitely a hold if you've got it. A buy for a lot of these brokers. So we've got Citigroup rates GMG as a buy with a price target of 23.50. Credit Suisse has got a rates a buy or outperform with a 23.49. And Macquarie's got a rates GMG as an outperform with a 23.93. So 3 brokers, 3 outperforms buys. They like the performance. And again, another very interesting article from Chanticleer AFR, really actually talking up that the management, who, Dave, is probably the one of the very few negatives you can probably put on the management. They've been incentivizing themselves quite a lot, putting almost $1 billion worth of stuff if they hit targets to give themselves. But the hurdles are very, very, very hard to overcome. So they need to really work hard. So they're aligned with the shareholders.
Wolf, I'll tell you what I do like about them, and just correct me, I could be wrong, but I was reading through the report. They're not very overly geared. I think they're geared to about, and I remember the Greg Goodman, when the Goodman Group in 2007, 2006 nearly could have gone under, because they were like a lot of other companies, very, very over geared.
The other thing is, because and I know that, remember, it was going down with Amazon, right? People were going, Amazon is starting to slash staff, and maybe the warehousing is not going to be built anymore. They've actually, in their report, they said that actual Amazon work in hand is minimal. The $12 billion they've got in work in hand is actually everything else but Amazon. So you've got to be liking that. So that puts to bed the argument about it's so linked to Amazon. No, it isn't.
And if there is a little bit of Amazon, that's not bad because I think they just had a really good Prime Day as well.
There you go. So, you know, at the end of the day, probably the premier company in this space globally, that is.
No, it's very good. I mean,
so you got to own it, right? I mean, it's one of the best companies here in Australia. You got to own it.
All right. Seek, Wolf.
Right.
You know, charts are, you know, at the moment, I think it's looking a big sell to me. Now, it's not a bad story. We know that. We know it's actually a very, very good story. So talk us through the result. And, you know, is the market treating this a little bit rough?
No. It's very, very fair. I think it's had a good bounce from the $20 to 23. So just a bit of profit taking. Look at the Credit Suisse results, Dave. And I don't mind a little bit of pullback. I don't want to see it going up, continuously. So I'm happy with those results. We've seen them previously, right? Yesterday, we talked about it. Good. I think there was an outlook of about 11%, I think, growth in 2023. And we've got now Credit Suisse rates seek as outperform with a $35.10 price target, Dave.
Okay, let's go back to look at that chart.
Come on. All right. So we've got Credit Suisse with outperform $35 price target. Right. And Morgan Stanley, just to give you a bit more of a kick up the bottom, overweight with a $36 price target.
Okay. I mean, I don't get them. I really find the price action. Okay. You're giving a big kick fundamentally, right? But, you know.
Look, I'll give you one more. Morgan's upgrade to add from hold with a 29.40. So even though they are lower, it's still much, much higher than the prices here. So look, Dave, at the end of the day, I don't mind a bit of a red candle in a recovering story because you need a bit of a breather. So maybe opportunity for the long termers again out there to have a look at this.
Well, I'm trying to give you some sort of, okay, long termers. That's got to be long termers, like people with a 10-year view, Wolf, please.
Yes.
You know, okay, I could argue the case. It has held that happy little red line more or less.
Yep.
Nibbling around $20. I get it. But certainly for short-term trader or medium-term trader, you wouldn't be interested in it. You know, people are impatient, Wolf. You know what happened? This will go sideways. This trend line will come down. I reckon give us 3 or 4 months. You'll be able to buy this when it's bounced over trend, when there's some momentum happening. It's just not the right.
I can understand.
I'm just talking technically. Technically, it's not the right time.
But I also understand from a conservative point of view, right? You know, if you think that there's going to be maybe a market pullback in September, just wait for that, see what happens in September, and then maybe go for it. Because, you know, I don't think it's going to recover back to, say, that $30 in the next month. You know, it's going to be a gradual thing. And this is why when you're a long-term investor, there's never a rush into something. I'm just happy that the results were decent and you've got a nice outlook. So just find yourself a target where you want to buy this, you know, with a view that if there is going to be some pullback in September, just be patient.
Wolf, SWM.
Yep.
I think we've spoken about it, haven't we? Trading at what, 4 times?
Yep.
You can't get through trend.
Yes.
So yeah, I can understand obviously traders taking profits here, but again, brokers like you, very, very, very bullish on the story.
Yeah. Look, the thing is, that fall down, remember the 3 bad red candles or 4 bad candles that it brought it from 60 down to 40. That was on the rumors and a couple of brokers out there saying advertising's bad, it's going to go down. It's, you know, we've got a recession coming. It's just all going to go to shit, right? So that obviously hasn't eventuated. So yesterday, Warburton, the CEO of 7 Groups, goes, well, it was a way overblown. You know, there's a little bit of softness, but it's still reasonably good. We still got a lot of, you know, a strong book with our advertisers and so on. So we're still very happy how things are going. So the market's obviously way oversold it on the room, as it happens, because the big brokers have got a lot of clout, and it's coming back to something. But if you take that longer term view, I still think it's going to be a decent performance out of this. And the 2 brokers, I mean, look, they're mixed. Let's give it that. So one has got outperformed, Credit Suisse, with a 90 price target, still pretty strong, right?
Nearly, yeah, up 80%, about 80%. That's not bad.
So they are better earnings. So they got better earnings than things. So they are happy with it. But Morgan Stanley, on their hand, has got an underweight, right? And they're saying, while they are happy with the results, they are just questioning the quality of the results, right? And they've got a 50-cent price target. So what a difference, right? See, 50 cents, we're there, right? So it's not a bad thing. So, you know, let's take a medium-term view, median view between the two. Let's say,
why were Morgan's not so positive?
Morgan Stanley, they're just saying that, look, they beat their expectations. However, a preliminary review, Morgan Stanley queries the earnings quality. One likely reason for the lower cash receipts, according to the analyst, is more onerous contract provisions. Though questions also remain on the severity of the TV ad market softness. So they are still questioning the ad market, right? So they're not believers. It doesn't matter what Warburton says, they're still going, I've still got a question mark. You know, and I've got some of that stuff sometimes, right? I'm still questioning.
It's quite interesting. It's quite interesting because you often think an analysis is on facts, right?
Yes.
But they're obviously, whoever did that is just someone's opinion. They're really basing it on their opinion, which is interesting. It's interesting that
they're going against what the CEOs say. They're taking their own view, saying, why we understand what you're saying here, Mr. Warburton. We are still thinking of the view that there's going to be much more softness in the advertising market. That's why they're not bullish. All
right, that could be right,
and that's fair enough. You know, I mean, that's why it's good to see a little bit of different commentary from two different things. One is like bullish 90 cents, the other one's 50 cents, and you think to yourself, well, if both are wrong, let's take the middle road and say 60 to 70 cents. I'm still happy.
All right, so we've gone through a lot of stories today. There's a lot of holds there, Wolf. There's a lot of long-term holds.
Yep.
And that's the sort of theme that I'm getting from you. And you're sticking your neck out with a long-term buy for Whisper.
Yep, I am. I'm just liking the fact that it is really undervalued compared to some of the other stuff out there. And that's the only reason why I'm probably liking this is that the valuation here is, the risk reward for me is very, very good here for me. That's why I'm taking the risk here.
All right, this is going to go on to the website. We will use a monthly with it. It's certainly not in the Cincinnati system. I wouldn't be looking at this in a million years.
It's the Wolfie system.
It's a Wolfie system, which historically has been very, very good. So I think Wolf, it'll be I can give you an idea.
Yeah, but you know, again, you know, every time I say when we're talking about long term and we're looking at monthly, don't come back, you know, to me next week and go, it's down. What do I do tomorrow? It's not the way we're going to be, you know, looking at this. We're going to be looking at this maybe, you know, every couple of weeks or maybe once.
I think you got to have a stop on everything. Stop would be
around. Of course.
The stop would be around 0.98.
Yep.
On a monthly. And so you got to just look at it at the end of the month and see where it is.
Yeah, I mean, unless fundamentals change of it, which they don't seem to be at the moment. They seem to be pretty good.
Well, yeah, you've got to look at them very sort of some good contracts long term, Wolf.
Yeah,
you've got to like it.
100%.
On that note, listen, thank you very, very much, Wolf. You've gone through all these stocks today, and I'm sure if people are owning some of these in their portfolio, you know, they can decide if they're going to keep them in or take them out. Absolutely brilliant, Mr. Wolf. Thank you very much, sir. Have a good day, and hasta mañana.
Let's enjoy your day, guys. Cheers.
Bye-bye.